All right, let's jump into it. It is 9:51 on Wednesday, 4th of March, and woof, what a day, what a night, and particularly with the man. Look, right across the board, actually, everything got kind of so absolutely pulverized in that. And look, you could say bit of this, bit of that, but realistically, I think the dollar is the big driver of this. We've been sort of really pushing at that sort of breakout level above 98 for a long time. I've said this for a number of actually unfortunately a number of months, but a number of weeks in that, particularly with that 98 level, that once that sort of breaks, you got the dollar at sort of like multi-year lows. You've got gold, and, silver metals at sort of like literal all-time high after all-time high. Where's the better sort of risk reward? And obviously, sort of like as soon as that dollar started to run, it doesn't matter. Like, yes, you've got the war going on and all this kind of thing. People think, hey, look, war, buy gold, yada yada. Well, that just sets up a perfect storm for everybody that sort of like bought gold and sort of thinks, hey, well, that's the trade. Well, they just absolutely pulverized, and it just kept on going through yesterday. So it was really, an unbelievable sort of sell. One of the biggest sort of sell downs I've seen since that big sort of like sell off from the all-time highs, and it really was coming fast. Like, there's a couple of little bounces in the way, I sort of along the way, sort of as it was coming down. But as you can see, like from where we at? So it's Tuesday here. So yeah, that little spike up early. But once that got taken out, with a little, as you can see now, with the beauty of hindsight, a bit of an engulfing. I suppose not above here, but still, certainly the close engulfing underneath here, and it just really opened up and just kept on sort of going there. But 377. So, better part of $400 in that it sort of came down, just shy of $400 from the highs to the lows yesterday. But where it sort of came back to, I find is quite interesting. And I put a post up at the time because, obviously I sort of thought this may have sort of come back down here as a plausible that it would come back down to this level here prior to this happening. But of course, the war pushed it up to the top side first. However, market still reacted right on that point, and this is the level that China's lunar holiday sort of started. The level where it was back over here, where markets kicked off kicked off where price was when they went on holiday. And obviously, you can see a little back test here banging up here. It's also around that psychological level, 5,000. I think it dipped just down, just a touch underneath it, like a couple of bucks or so. But as you can see, a fairly strong bounce, very strong bounce. And that was the only sort of really sustained bounce it had through that move. As you can see, if you get onto the lower time frame, this is on the 30-minute here. Um, this is what I was sort of looking at the time because you're trying to make sense of, okay, you got these falling resistance through here are the ones that look like I don't like chop through things and that, but when these things are falling at this hard, you just got to kind of sort of go, where would the next level be down be? And you can see it started to get this on the 30-minute, a bit of a sort of negative divergence coming through this period down here into that sort of, kind of call it support because it's a psychological level as well. But as well, that is that sort of lunar year as well. Also, it was actually a support for where it did that little back test before exploding up about a week and a half ago. So as you can see, sort of it actually sort of held that bounce a little bit more, started to put in for the first time a bit of a higher high through that period there, and it's really just sort of rolling over a little bit sideways. So I don't think this is going to be some sort of V-shaped recovery. I wouldn't be surprised if we do see a little bit of a dip down here, but should we sort of get a bit of a sort of dip down here and hold above these lows over here, which I do think we probably will do, the emphasis is going to be on the bounce high, which is really, if we put that back here and just sort of match up some new lines here. So if we put it up around here, sort of, 137, 137, 150. That's the thing with ECs as well. You're like, oh, look, it's just a little bit of a blip here. But you sort of forget the fact that sort of, because we're up around these sort of 5,000, 5,200, whatever levels, it's moving so quickly. Again, put on lower time frame. This is a 5 minute. You can see some of these things. This is a 5 minute candle through here. 187, two of those candles, so 10 minutes, $110. Coming back through here, you got a 5 minute candle, 25 down to 60, so $60, 5 minute candle. Like this thing was really like when it wanted to go yesterday, it was just sort of like up and then bang, slam back down. And that is like obviously they're driving it towards a level kind of thing. You can sort of you can feel it. Like I mean, if you look at the sort of the difference in the buy up candles, these little sort of things, opposed to these ones where they're just like dump, bang. Look at these big, fat, long candles coming down. So yeah, I mean, I don't think necessarily like okay, it's fully game over for gold. But as I said, the other week, I do think this is a level they wanted to drive it back to at one point, and obviously it sort of got back there now. So we got to sort of think: is that sort of objective done? Like, are they sort of okay? We wanted to really hammer it all, smash anybody that sort of thought, hey, look, war's happening, buy gold. Well, let's just take them all out, get back to that lunar level. Okay, boom. Is that objective done now? And now we can sort of look to what's next, i.e., sort of probably moving up a bit. Let me move this. Oh, wait. There we go. See, where's the other side of it? Okay, so now that we've got a little bit of a low here, we can kind of sort of drag this fib up, make it down so we can see it a bit better in the red. And you can see that sort of like, where the bounce came to from yesterday's high just down, not the full move, just yesterday's move, 38% retracement of that. So it's still very much in an area in which we could be sort of seeing, potentially, whoops, something like that. Excuse me. So I do think that sort of like, we do have this kind of leg to come here. I'd be surprised if it opens up and just goes straight up, to be honest. But what I'm sort of looking for in this kind of like scenario setup here is probably that third drive down to see if the buyers can step in from this level over here and then sort of see some sort of progression up like this to give us a bit of a higher low. The emphasis then, like I said before, back on this level through here, this sort of called 5140, close above 5140. Get rid of this. This didn't seem to really do too much. Yes, I did it. Move these ones back. See if we can get a higher low, maybe a body fill around this sort of like 30, sort of 50, 37. Get a higher low. Emphasis back on 5145, 5150, that kind of area through here. And then a close above this would signal to me that, hey, this kind of structure, as you can see, it's the same sort of thing I say every day. Down, find support, find resistance, tackle the lows, bang, you go through. Starts again. This is leg one. Leg three is leg one. Move down, find support, up, find resistance. Where resistance come? Previous support. Come down, tackle the lows, bang, you go through. So what you want to see is a change of this structure. We do have a little sort of internal move here. As you can see, they tried to move it down. So you could say, hey, look, this was the drive and this one was really trying to give us a higher low or not. But I think sort of coming into the end of the session and the fact that when it did actually bounce back up, you can see it's only like a little bit of a small move sort of through here. I think this is still part of a bigger structure which needs to sort of confirm a significant higher low and then sort of break through, have that close above 5150. And for me, that'll signal that probably we're going to see a little bit of upside. Then we're kind of sort of looking at 51.75 and 52.25 as those sort of levels through there. All right. All right. One thing that I sort of will point out, actually clear up a few of these, actually see the chart a bit more, is obviously the sort of the strong correlation between the dollar and gold. So if we sort of put them side by side, emphasize it a little bit, you can see the time the the dollar started to turn is when we actually started to get that bounce in there as well. Oops, this is the one here. So I put a post up on X at the time, which is obviously middle of the night here. We had this big sort of negative divergence sort of appearing on DXY, and as you can see these the charts line up with the dots either side, but this very low here, as you can see, is very much the high of the dollar here. And I think this is the important thing when, this is a very sort of old known correlation, DXY and gold. I've said it a number of times. I sort of work off a bit. I used to say I work off a 90-10 rule. I don't know if that actually holds true so much anymore. But point being is that sort of 90% of the time they run inverse, 10% they can run together. But basically, just sort of saying that they can run together. Like gold can be risk on and risk off. Like the market was very much risk off yesterday, and gold got smashed. So, that it's obviously sort of more associated with a risk on kind of sort of thing. Because you look at other assets like Nikkei, it was a big driver, got smashed. Yen strengthened, risk off. Very like strengthened up a lot. Aussie dropped, I think it was the biggest drop in like almost a year. Got absolutely pulverized. Risk off. These kind of things. So, gold was obviously running more as a sort of, if you were to say, with risk, opposed to sort of being a safe haven choice yesterday. But you can see sort of like, when the correlation's so strong in the sense of dollars breaking out, gold's getting smashed, you don't need to necessarily just look at the gold chart to get that confirmation, get the idea that things are turning around. You can actually sort of look at the other sort of corresponding charts. So like you can look at sort of what's happening with silver, you can look at what's happening with, obviously in this case, DXY, and you start to see a top signal here. Well, you're going to start to see a bit of a top signal, sort of with what's called with with gold as well. So still need to have my coffee and that sort of wake up a bit more. So yeah, there was a little bit of a sort of obviously a turn coming with the dollar here, and it just coincided with gold sort of turning over here as well. Anyway, let's get back to it. So I'm just going to whack a little zone in here. So I could say sort of short term underneath sort of say 50, 70, so 50, 80, just for a round number. However, as I said, I think if there's a downside move, I'd still be sort of cautious about sort of going too hard on a short here. Apart from the fact that you're at the end of a massive move that's sort of come down here, going too hard at this point here, I don't know if the risk reward's really in this point here. If it does sort of happen to sort of get down there, you're still opening yourself up for the possibility of a move like this to come, and with that higher low that we would be looking for. So I think sort of like, sells kind of would be a little bit more risky here, unless you sort of break through sort of 5,000. Through 5,000, then okay, next round of everything's on, and we can look at maybe 4,800, 4,900, those kind of levels down there. But I mean, here we are, we've opened up, it's only sort of 10 minutes in, chopping around a little bit. But as you can see, it's sort of it's trying to sort of push up off this level. So it closed its little gap. And as I said, I think the emphasis is on this level up above here. But structurally, it doesn't look like sort of sideways and then up like this. So I wouldn't be surprised if we get a little bit of chop here. But short term, there'd be the two levels that I've been looking for. I think upside's probably got a bit more sort of like potential than shorts at this stage. All right, so let's move along. Have a look at the dollar, because the dollar is the big one. Dollar is the one that we got the breakout the other day, and this is the one that I've been touting for a long time, and they sort of recover every day. And to my own sort of very much sort of frustration, you could see sort of like how many times they were trying to hold it down, hold it down. Last week I put up a post there sort of saying like, because it was funny, like 6 o'clock, almost on the dot every day, London pre, the market would buy the dollar, buy the dollar, buy the dollar, and you can see that the buyers are moving up here, they're moving up over here, and they're really applying the pressure coming up into this area here. So it really was coming to a make or break into this point here. We obviously had the war thing. Second effort on the lower time frame to get that breakout. As you can see, this is what we were looking for, that big, whoops, that big sort of close. This thing here, through that line, we got it, and bang, away it went. And this is the point of sort of waiting for the confirmations with these things. I'm not necessarily the best at waiting for the confirmations always, but that is the point that you can see the emphasis, you can see the result of these things once you've got that. So the trade-off is that, okay, yeah, you've got a couple of extra points down here, but you've got higher confirmation here. So effectively, you're skewing the odds in your favor with that the trade will actually sort of play out and be successful. I mean, to me, that's a pretty much a no-brainer. Anyway, you can see that obviously this is the area where sellers are still moving down, sellers moving down, they relinquished, and they were holding that flat line here at 98. Once that's gone, bang, shot right through. Now, that was obviously 2 days ago. So yesterday, I was looking potentially for this kind of move to happen. A bit of short-term weakness, to retest and then come up here. It didn't happen. It just pretty much, it came down a blip and then just exploded up higher. And it was funny because I was thinking about this sort of through the day, and I was sort of like, okay, well, what, you can always try to sort of unpack, what does that mean? What does it mean in that? And it's like when you sort of see, when we saw silver is a great example of this kind of stuff, where the structure didn't really matter. So in normal sort of structure, as I say all the time, you have your three legs, you have your breakout, find resistance, you come back, you find support generally at the previous resistance, and then you move on like that. And that's your normal sort of structure. And okay, fine, we can use this. Comes back here, holds here, we look for the higher high, and that's confirmation to move forward. That's your normal sort of structure. Silver, as I said, great example, and this is all obviously still a great example here as well, that when you don't get this back test and they just run it up higher, you've got the demand so strong that people aren't waiting to either A, close shorts. They're not like, hey, look, you know what? I'll come back here. I'll close my short because I was trying to say I'll short while I'll stay short while it's under this level. Oh, it's broken through. Come here, close my shorts. They have to buy back the positions to close the short, and that gives that extra push of buying pressure moving up like this. Yeah, that's a normal sort of structure with it all. But when people sort of go like, nah, I'm not going to wait and I'm getting out of my shorts, or people sort of go, look, you know what? I'm not going to wait for the back test and I'm just going to buy it. That's You got to think, okay, what's happening? Why? What's the mentality of somebody that's doing that? And we're talking a collective mentality because obviously this is a massive market. No one person's going to be moving it. Collectively, what does that mean? Well, it means that the demand is super strong and people are very much driving to get this thing. I'll buy it. I won't wait for the back test. I won't wait to get out at a better thing. Why would that be? Well, it's because you have a pretty strong idea that it's going higher. It doesn't matter, like, if this thing does go to 100, 102, 105, whatever, those kind of levels, we'll deal with those levels when we get there. But even just through yesterday's session, it went to 99.7 or so. Why would you just buy it at 98.5? Because it's going higher. You know what I mean? I don't, a couple of points here and there don't really matter much. I just need to be on board. I just need to be involved. And that is just high demand. And it's kind of like almost a bit of emotional kind of trading. And this is what this is what made trading silver so difficult through that explosive move to the top side, is that there was no structure or very little structure. Like prices would come to back tests like this, but they wouldn't get to the back test level and buyers would already be stepping in. And that shows high demand of kind of, to me, I explain it as a bit of emotional trading. People just want to get on board no matter what. And what happened with silver? Well, it went up, a couple of 100%. So you can see the end result with those sort of things there. And this is pretty much what we saw with the dollar yesterday. And as you can see, sort of like that's why people were just rushing to get out of metals. And they were just rushing to get out of sort of risk sort of products and that. Interesting thing with the dollar as well at the moment is that you're seeing a big shift in, you know, without sort of sounding like a tinfoil hat person, the narrative, sort of what the headlines and the Fed speakers are starting to come out and say constantly. Because remember, for the whole of last year, we had the Sell America trade. And it was like the fad, like, cool, let's sell America, yeah. And look, you know what? Dollar got smashed, bonds were down, equity market's still obviously pumping through and that. But now there's sort of a lot of reports on that that sort of like, that's not actually the case. And we're starting to see a lot of reports come out where, like, sort of US treasuries and that, obviously the stock market's been very strong as well. The data, all in all, isn't too bad, particularly compared to their peers. So you've got, like, 12 months of this sort of frustration of built up of people, yeah, sell America, de-dollarization, blah, 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 all this kind of garbage. We've got this fake out move down here now, because remember this, if we look on this on a larger time frame, this is really just a trap. I said that if you want to go even higher, go into the monthly or the weekly. I think I had it on here. But this is what I was saying, sort of when we're down this point over here. Here's a very clear-cut sort of little chart. Failure to break through this level here. Well, failure to break through can only go one way, and it goes back the other way. I think weekly might show this as well. Yeah, as you can see, so boom, boom, boom. And so emphasis is really back on 100 now. Where it has also popped through is sort of kind of like a falling resistance that we had from, when Trump first came in. I'll do a separate video about the DXY just because I can sort of go on about this thing for quite a while. But anyway, something that's applicable and sort of usable sort of through, these sort of sessions. Obviously, we saw a little bit of a sell down into the close. This is on the 4 hour. It's a little bit overbought. So look, I think it may need to cool a little bit. Getting back over here, I don't know if I'm necessarily going to see that come down there, but should we see a little bit of cooling after this massive move through here, as we said, we are sort of overbought. Was a daily is a bit overbought there as well. Taken out the body fill of this level over here. I wouldn't be surprised if we do see a little bit of cooling. I don't think this is like coming over here or anything. But should we see a little bit of cooling, that'll probably come a little bit in line with a bit of reprieve in metals. But I think really its end destination at the moment is up around this 100 level. I think this is where it's kind of heading, whether it be sort of today, tomorrow, or, was it Wednesday? Yeah, Thursday, Friday. Whether it be sometime soon. I think that's the big test. This is where we need to sort of see what is the market going to do, because sellers, 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 this is what we've got to test. We've got to see, are the sellers going to be here? Most likely when you get to these things here as well, because it's been, I hate the term, it's been a minute, it's been a little while, it's not going to go through first time. Like, you're going to see a pushback here, and they're going to try and defend this thing, like we saw down here on the lower time frames through these zones here. Came back to it. Well, this is all relative to the time frame. Came back to that level. Did it go through straight away? No, they smacked it back down. They held it and they held it and they held it. But if we start to see, multiple tests, and again, this is a much higher time frame, multiple tests at this level, and we can see the buyers continue to sort of progress and push up and put pressure up onto the top side there. Well, that could be the time that we see mega breaks and that could really sort of be setting US dollar DXY up for a multi-month break, because this 98 was, you could see the reaction once it went through, and you can see the reaction across the board with the rest of the market. Forget the war and all this kind of sort of stuff. That short of oil, I think everybody's kind of like, okay, what's next kind of thing. Yes, I know it's still going on, and you turn on the TV, and it's sort of like it's blowing up every 2 minutes and that. But the point is, it's sort of that's obviously not the only driver. And if it were, then gold probably would have been a little bit stronger, and whatever, all this kind of stuff. I mean, dollar does typically strengthen during war periods. So, it does kind of explain this, but I don't think that's the only factor. Anyway, point being is that sort of should it break 100, we're going to see a big move. And even the fact that we got through 98, I think is significant to give us an area up around here, this 98.50 to 100, that it can bounce around in before potentially breaking through here. And because it's been a year pretty much into this zone down here, the significance of this thing breaking is it's not going to last in one day. It's not going to finish in one day. It's not going to finish in 1 week. I'm sure there's like some sort of little scale we could put to it. But the fact that you've come through this falling resistance, if you get through outside above this sort of like range bound sort of thing above 100 over here, you've got to be looking up. I mean, next step's 102, then we're up at 104. They're going to be quite significant lengths of time, and it's going to really weigh on the metals, and it's going to, certainly Aussie's going to be taking a little bit of a slap on this thing. The euro, all the US dollar crosses. Obviously, Aussie's not part of this, but again, if the market's buying US dollar, it doesn't matter what the RBA says. Like, it does, it factors into it, but it's not enough to stand in the way. At best, it sort of holds it up from being utterly destroyed. Like, you know what I mean? Like a dollar breakout with a dovish RBA is kind of like, low 60s, but hawkish RBA, reluctant to say sort of so dovish Fed still, but the dollar breaking out with a hawkish RBA, maybe 66, 67, we'd have to sort of see. But anyway, getting ahead of ourselves. So overboard on the 4 hour, pull back here a little bit. I think sort of like we could probably sort of almost sort of drag ourselves like a little bit of a box around here. Downside 98.55. If it does come back down here, undo that big drive from yesterday. If it gets back here, I imagine you'll probably get a bit of bounce from there. I probably actually don't really see it coming down to 98. I wouldn't be surprised if, as I said, we're sort of dancing around, sort of like 98.70s up to sort of 100 or so. But certainly, while this thing's on the move, once if it breaks out, takes out the highs. I think that's when we'll see another wave down with the metals. All right, dribbled on there for a little bit. I'll try and fly through the next ones. So we had silver. Which chart are we using? This one, yeah. So silver obviously sort of like it was already getting hammered. Into the end, it actually held. It started to hold a little bit better than gold did. Gold actually in this last leg here came down a little bit further, but this, excuse me, sort of really came back right into like I put this buy zone in the other day. Admittedly, I put it in, I think, maybe around this 90 level over here. But this is a very much a structural level in that it's the breakout level of this big triangle down here. And so a big, massive round trip, 78 up to 96, 97, whatever, came back down into it very fast. Again, this is a support level. I did have it as a buy zone. I didn't buy it though. But did sort of come back into this level down here. I wouldn't be surprised if we do see a little bit of a bounce. So same with sort of gold. Gold's level was I think 51.50. I think sort of that's the bounce high. Well, it is the bounce high. 84, 84.40 is going to be that sort of level that we're looking for silver, sort of up above here. So close above 80, uh, say close above 84, should see a little bit of a push back up. 86.30 is going to be interesting because obviously this was a bit of a support. It was a previous resistance. This I don't see it sort of going through. So I don't think this sell down is completely done. I think any sort of move up here is still going to be subject to sort of getting slapped back down. I very much doubt that we're going to get a big V-shaped recovery. Of course, could be wrong, but I would be surprised. I would be probably more looking for some sort of move up to these levels over here and then sort of another larger attack at the lows. And I think that'll be a structural move that'll sort of really dictate whether this move down here is done. So open to the idea of some sort of short-term upside here into sort of 86 to 88 into this realm over here. But once we get here, I think sort of like, it'd be structurally sound for it to have one more pushback down here to really sort of confirm a higher low, put the emphasis back on the bounce high, and then to see it move up like that. I think that is probably a more plausible road to recovery if silver is to recover than, whoops, than that V-shape. V-shapes aren't as common. Last year they were very common actually. They sort of came out a lot, which was very frustrating because they're very tough to trade. Um, yeah, sort of, I wouldn't be surprised if we do see some sort of upside here. Think about it sort of like if you break the highs here, a lot of people, oh, look at this, high, low on this section here, high, low, broke the highs, here we go, we're going all the way up. But as I said, a lot of these structural things, because they apply across all time frames, you then need to put it onto the other time frame. So if we look on a daily, most likely, you're going to have to sort of see some sort of move like that. And I'm not saying that this will happen on a daily aspect, but a move up here, move down here, and then that is how you probably see a bit more of a turnaround, opposed to this candle just being a big blue candle coming straight back up and undoing the whole thing. Look, anything's possible. That's what a V-shaped recovery would look like if you put it onto the daily. It would just be straight back up. But even as you can see with this big massive sell down here, think about it sort of here. So two big sell downs here, two big sell downs here. This one came up, and then bang, we got that next run down here. So, I'm open to the idea that we could see some short-term upside here, but I'd be cautious of sort of buying and holding long positions, thinking that, hey, that's it, that's the sell down, and that's it, we're just going to go. I would like to see this structure form and then sort of go a bit higher. And then sort of say, okay, yeah, silver's sort of come back here. Look, honestly, I do think silver's probably sort of still going to come down towards these 50 levels. I was saying the other day that I think sort of, silver will hit 50s before it hits 120s. And certainly these sell downs puts it on its way to sort of doing that. Drag this across. I don't know if I'm a big fan of this kind of thing through here, but technically it's on the underside here. Anyway, look, that's kind of my approach with this would be sort of like short-term upside with these metals. I wouldn't be sort of holding for new all-time highs or anything. I'd be getting ready for some sort of short-term sales and that, but it doesn't mean you can't squeeze out a couple of bucks either side in the directions. All right, sort of rocket along. So we got Aussie. Aussie got absolutely pulverized yesterday. So this was the plan yesterday. A little bit of an early push up, which is what we got. I thought it may have got up to around these levels and sort of maybe even sort of held or put in a bit more of an effort. But as you can see, it very much turned around, just got absolutely crunched. So it came all the way back down here. So this is what I was saying the other day, that there was a potential double top coming in play. Double top sort of gives you a price target sort of between these two, between the highs and the swing low there. Take that sort of price target, put it down over here, comes down into this zone over here. So pretty much right back down to this previous zone, which I think actually must sort of be a zone from a long time ago as well. So around that sort of, 60, what we get, 69.44. Wow, that even overshot what I sort of thought it was going to be coming down to. But again, you can see this, look at the bounce that came up here, very strong with it all. I wouldn't be surprised if we are, as I said, sort of done with this little sell down just for the moment. Any sort of pushback down here, I would expect a 70 to maybe to hold and then sort of maybe try and sort of push back up into here. But again, I think it's only just really short-term reprieve. I do think the dollar is going to continue to break higher. And as I keep saying, I don't think the RBA being slightly hawkish is going to be enough to sort of save it. So I do think that sort of like any sort of move up into these areas over here, 70, 70, 70, 80, I think is going to be met with some selling and we're going to be sort of coming back down. So something to this sort of effect, should we see a move up over here. However, let me move this out of the way. That's a move from yesterday. So this is the idea with this. If we do see a sell down earlier, I do think that could be the play. But as I said, once you get up into that area, I do think that'd be the sells through there. So, not really sort of in either camp at the moment. As I said, this is actually a bit of a V shape, as you can see through here. As soon as they start to sell the dollar off, bang, pile back into these positions. Maybe a little test down, little sort of like, basically just a head, play with the head a little bit here. But I think sort of any sort of move down towards 71, if we see the market hold it, because this is a little mini zone, it's not like a full zone, but as you can see, it's sort of held a couple of times. It's not a big significant one, but it has held and played, and obviously even just, on the way back up, it's kind of held a couple of times, this sort of 70-10. A move down into this zone here, I think sort of could still see a little bit more upside in this recovery bounce, but again, same with the metals. I don't think it's a time to sort of be buying it because you think it's going up to the highs. I think there's very much a chance that sort of should it go a little bit higher, we do start to see a sell down. So I'm just actually dragging a fib over this thing here now. You can see it's 61% has already been hit. So I think if you could break 70, 70, 60, then I could see probably a move up towards that 70, 80s. But I think if you get up over here, this is the time you look for your sells, or I'll be looking for sells, put it that way, to sort of get the drive back down over here. So I think these are just reprieve bounces. Same with metals. I just don't think that necessarily things, when you see sell downs of that magnitude, I'd be very surprised if it sort of moves the next day. All right, and finally, just sort of move on to Aussie yen, and this thing got absolutely smashed yesterday as well, like which is the biggest sell down we've seen. Actually, took out at Monday's low because this is the thing is that I was saying with all this sort of stuff over there, where I guess it was the Tuesday because I didn't do the Monday, I don't do the Monday videos, but the fact that Aussie got bought up with all this sort of stuff happening to me just it didn't seem right. And I said that yesterday, and I sort of put it in the notes as well, that it kind of seemed more like these kind of moves, and to a certain degree, sort of partly why we saw gold get absolutely decimated and that as well, is that there's so much of the market that are sort of like, oh, look, war happens, buy gold, buy oil, sell risk, that's the stock standard playbook. Well, what happens when war breaks out and then risk buys up while you're trying to sell it? People get blown out. They're like, what the fuck's going on? I don't get it. Why is it doing this? Yada yada. And then sort of like, then you see the move happen. And this was actually, get rid of the arrow on this. This is the trade that I was looking at yesterday. I took but didn't ride, unfortunately. So I did okay on it, but just not super. Um, the top side of this. Maybe I didn't have that on my feed. Anyway, it was a little bit of a triangle that was sort of wedging up sort of through here. And sort of I got out like maybe here or something, so I missed the bulk of that second part of it all. But anyway, whatever. Beside the point. The thing is that sort of like saying if you look at oil when it opened, massive gap up, all the issues happening. What happens? Goes from 75 back down to 69, $6 or something. Obviously, yeah, now beauty of hindsight, the things recovered and gone even higher, but now it's starting to sell down again. You know what I mean? I think sort of people go, oh, war's broken out, particularly that part of the world. Oil, bang, closing off the Hormuz Strait or whatever it's called. You know what I mean? So buy oil. And so they smash all those sort of people. I think that's the same sort of thing that we're sort of starting to see with metals. Certainly what we did see with risk with Aussie over that Monday. I mean, look, this is Aussie yen. And people sort of go, well, what the hell's happening? And it keeps grinding higher and higher and higher till they blow out all those sort of people and they're either blown out mentally, blown out financially, then you see the move happen. This isn't something new, this kind of sort of games with stuff. And it's funny when you talk to people and you say, people that don't trade maybe so much, and then you say, oh, yeah, this is what they're doing. And they say, oh, yeah, they, of course it's they. Or do you think these things just sort of randomly generate and move? No, of course people are on the other side of the trade. Like, people 100% sort of know what they're doing with the price. And it's not purely just tinfoil hat, it's all manipulated, but quite frankly, yes. So anyway, point is that sort of like we got this absolute mammoth sort of sell down here yesterday, came in and actually held this channel here again. So, it's no sort of shocker with this one here, but we've seen this channel hold here. And look, where it closed is actually quite significant as well, because as you can see, there's a bit of a zone through here and managed to, even though it got down underneath here, managed to sort of bounce itself back up over here. So I think short term, that's important for it to hold. So hold above sort of, 140. Let me just fill out some notes. All right, just filling out the notes there. So, look, I mean, look, the bounce is quite significant, quite strong here, but I think same with sort of like we saw with Aussie, and same as I sort of think with metals, I do think that these are just going to be kind of like bounces to just get at least another sort of wave of selling here. 61% with the bounce, same as the Aussies we saw just then. I think the fact that it closed above here means it's okay for the moment. I don't think this is anything significant. Should you close underneath 140, then I think you'd be looking for the wick fill. But if you get the wick fill at that stage, you're probably coming out of the channel, which is going to be a bit more of a significant sort of move to the downside. And I think this would potentially, if we do see this come at this point, I think this will be the same time that the dollar's possibly breaking through 100. And we're probably sort of seeing metals really sort of have another big, strong sort of wave to the downside there. Quick look at the data sort of coming out. So we had a bit of US data overnight, strong data here as well. As I said, the headlines and the way that people are talking about, oh no, that was sort of Monday night, sorry. The way people are talking about things with the US at the moment is very much more in a positive light. You're seeing that reflected in the dollar breaking out at those times. It's just funny that, the time that in which they sort of want to sort of champion the dollar is while the prices are already sort of reflecting it. Yeah, I get that's the idea. Like, you don't need to be the first into the trade, but it's kind of like everybody that's sort of been telling you for so long, oh, de-dollarization, yeah, sell America, all this kind of thing, droning kind of stuff. Now they're all like, yeah, no, America's great, and yeah, it's going higher, and we've got to do more about inflation and all these a lot more hawkish sort of tone to these sort of things. So it kind of sort of flips the script there a little bit. We do have Aussie GDP. Look, this is expected to come in a little bit stronger here. This could be the catalyst that we could see to see a little bit of a push higher in Aussie. But again, GDP is not going to be the thing that saves it if the dollar starts to buy. So if this does get a bit of a pop higher, might sort of get up into those sell zones to sort of look to see some sort of reversal from that 70, 70, 70, 80 kind of area. A bit of China data coming out, PMIs, nothing sort of super exciting there. We do have ADP. All these things as well. You forget that we got ADP. ADP is actually looking a little bit stronger this week, month. So that'll be interesting. Plus, got ISM services as well, still a little bit stronger, or coming expectation a little bit weaker, but still in a strong zone over there. So I wouldn't be surprised if, yeah, maybe we see a little bit of sort of consolidation with the dollar today, but I don't think. I think it's kind of like genie's out of the bottle kind of thing, and I think there's going to be more sort of dollar strength to come. All right, that's it for me.